UK retail sales fell 0.3% month-over-month in March after a 0.1% drop in February, while the composite PMI slipped below 50. The UK retail sales angle matters because the warning combines household spending weakness with business contraction, not just one soft data point. The tension is whether retail and PMI data turns into a durable change or simply a sharp data point. That is why the first read should stay close to the confirmed numbers: 49.8 composite PMI, 0.3% sales fall, and the immediate checkpoint around 40% recession risk. For a market structure story, the useful readout is how capital, liquidity, rates, or risk appetite changes after the first move. The reason to keep watching is that the next checkpoint can change the meaning of the first move. The useful baseline is that a composite PMI of 49.8 signals private sector contraction, with services at 49.5 and manufacturing at 48.9. The key baseline details are 4.75% bank rate and services 49.5, which give the story scale without requiring speculation. This scene grounds the viewer before the mechanism takes over. If the baseline changes, the rest of the story changes with it, because the consequence depends on whether those confirmed details keep holding. The most important baseline split is between what is already visible and what still needs confirmation from the next public signal. That scope keeps the segment focused on the mechanism that actually changes outcomes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is straightforward. Weak consumption and contracting business activity tighten the trade-off between cutting rates to support growth and keeping inflation contained. That is the working engine behind UK retail sales, and it explains why the event cannot be read only as a surface move. In this case, the mechanism connects 49.8 composite PMI with 40% recession risk. When that connection weakens, the story becomes less about the initial number and more about whether the system, market, or policy process can absorb stress. That mechanism is the reason a viewer should watch process quality, not just the largest number in the story. The affected side is sterling. UK gilts, equities, and risk-sensitive markets can react if recession concerns replace soft landing expectations. For viewers, the useful question is who actually has to react: users, traders, issuers, regulators, operators, or institutions. Here, UK economy sits at the center of that reaction, while TD Securities shapes the next practical step. The consequence is strongest where the event changes access, trust, liquidity, compliance planning, or the cost of making a decision. That makes the impact measurable through behavior, not through hype around the topic. The open question is the next data will decide whether this is a temporary pause or the start of a deeper demand-driven slowdown. That limit matters because the confirmed facts do not automatically prove the most aggressive interpretation. The safer split is to treat 0.3% sales fall as established context, while leaving the unresolved part open until a stronger signal appears. That keeps the story useful without turning a partial data point into a conclusion. The open point should remain separate from the confirmed facts until a filing, market move, patch, data release, or official action closes the gap. If later evidence changes the read, the story should adjust around that evidence. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The clean checkpoint is the next signal is whether April retail sales and PMI data confirm or reverse the March deterioration. For UK retail sales, that is the point where the story either gains confirmation or stays stuck as an unresolved market, policy, security, or adoption question. The practical readout is to follow 40% recession risk alongside the supporting details: manufacturing 48.9 and 49.8 composite PMI. If that next signal arrives, the story moves. If it does not, the only confirmed position is the one already visible in the evidence. The viewer should leave with one concrete checkpoint, not a prediction about where the market or policy process must go.